Tariffs on, tariffs off. Tariffs on, tariffs off. It's been over 3 weeks now since President Trump's Liberation Day. Liberators have a lot of gains in our portfolio, and I don't know about you, but I'm exhausted. And guess what? Nobody has any idea what the hell's going on, man. But investors all over the world are dealing with contradicting headlines every single day. Right now, nobody, and I really mean nobody, probably not even Donald Trump himself, has any idea what the hell's actually going on anymore. But hey, shout out to the Kabezi letter on X for this perfect summary. Stocks are falling like Trump is escalating his trade war. The US dollar is falling off a cliff like the tariff war is almost over. Gold prices are skyrocketing like rate cuts are on the way. Oil is falling like rate cuts aren't coming. Tech stocks are falling like a recession is either coming or here already. US Treasury yields are rising like the economy is fine. And Bitcoin, well, shit. Bitcoin's breaking out like the damn bull market's back on, man. Bitcoin to the moon. It's a lot of contradicting things right there. Usually more of these things move in opposite directions of each other or more in unison with each other. And it's a lot of broken models, let's say, or risk on, risk off, the whole goddamn system about to burn to the effing ground. Well, let's try to entangle a little bit of this mess to work out what we could be looking for in the future. If stocks are falling like the trade war is escalating, that means that investors are bailing on risk assets. That's a classic move when trade wars kick in or massive uncertainty comes into markets more broadly. Less global trade means lower corporate profits, which means stocks become less attractive. Investors sell. That makes perfect sense, right? But hold on. The US dollar is falling like trade deals are near, which means if the market was seriously scared about tariffs, like really, then the dollar should be rising as people rush to the safety of the dollar. Oh, everyone's betting on the decline of America. American hegemony is over. It's all going to zero. Dollar's not falling. American hegemony is not falling for a long time, but the dollar is dropping like everyone expects a happy handshake and a new tariff deal to be negotiated ASAP. The math just ain't math in here. Then there's oil prices, which are falling like rate cuts are not coming. The market disagrees. Falling oil prices suggest weaker economic growth is coming, but if rate cuts aren't coming, wouldn't demand stay kind of stable or even rise a little bit? Apparently not. That's yet another massive contradiction. Traders, of course, have piled into gold. Recession's locked and loaded, baby. Gotta get gold. It's the only thing that's gonna survive the coming Armageddon. You guys ever see an I Am Legend movie? It's like gonna be like that, but for gold investors. Rate cuts are gonna come tomorrow, pushing gold up to new highs of $4,000 an ounce. It's already got up 3,500 this week, which is crazy. Year to date, gold's up 25%. But could that have been the blow-off top for this gold rally? Well, it could be. Gold got pretty damn overextended. But so far, no rate cuts, no Fed pivot. Tech stocks, man, those have been falling like we're already close to a recession. We're in one right now. The moment markets go risk off is the minute that liquidity flows out of big tech stocks into less risky assets, whether that be gold or bonds or Johnson & Johnson. But this next move has been quite a surprise. Bonds, historically the safest asset class to hold, have sold off super hard, pushing yields higher. Again, everyone's betting against America and selling America. If yields are rising, it usually means that investors expect growth to pick back up. That's the exact opposite of what tech stocks are signaling, though. Again, massive contradiction. So in one corner, the market's acting like a global recession is basically a done deal. New Great Depression's here. It's going to be over, man. Pulling of hair, gnashing of teeth, all that kind of stuff. In the other corner, it's pricing in strong growth and rate cuts all at once. The market isn't broken, but it is confused as hell right now. I mean, I guess I get it. Every time Donald Trump tweets, we have to react to some new information. Then there's Bitcoin, starting out the first breakout of the year. Crazy shit. We're going to get to that in just a second. But here, real quick, guys. If you're tired of jumping through hoops and ID checks and endless forms for restricted countries just to be able to trade a bit of damn crypto, you need to check out Femex. It's fast, it's global, available to anyone, anywhere, zero KYC. Use that link down below. It doesn't matter where you live, you can use Femex. I've traded on Femex for a long time, literally years now. It's been rock solid every step of the way. No delays, no nonsense, no bullshit. Just click the link, start trading, have a good time. And right now they're handing out some serious bonuses. You get $10 just for starting your account, it's a welcome bonus, $500 in deposit rewards, and $1,200 in trading bonuses. So look, if you're serious about crypto, you want to be able to long the rip, short the dips, make money no matter what the market's doing, you need a good exchange that lets you do that, lets you trade the way you want to trade without getting in your way. Don't wait. Hit the link in the description. Get started on Femex today. Thank you very much. So, Bitcoin. It's crazy shit, man. All this political theater. Bitcoin usually goes TikTok next block and is kind of doing its own thing, but Bitcoin's quietly edging higher because Bitcoin's superpower apparently is thriving in times of extreme distrust of the system. Maybe it's not even about trust anymore. Maybe it's just the whole game is this simple. Follow the effing liquidity. Okay, now normally when tech stocks are dumping, Bitcoin would dump pretty hard right along with them. And to an extent, we did go down, but less than stocks this time. Bitcoin was oddly resilient. There's a lot of reasons for that. Partial gold trade, partially just where else is the money gonna go? Throw some into Bitcoin. But global M2 money supply is telling a different story. Oh, Lark's talking about the global M2 again. Get the wife, get the kids, let's go. Bitcoin has been following global M2 like clockwork, just on about a 3-month-ish delay. And it hasn't been perfect over time, but more and more it's correlating with it. Right now, between the Fed's mixed signals, Trump's tariff drama, all Bitcoin really needs is the spark. It's a powder keg. And that spark is called liquidity. The more chaos out there, the more Bitcoin looks and feels like a lifeboat, a credibly neutral international asset. And let's not forget the other reason of Bitcoin holding strong. Bitcoin whales have been buying aggressively, like they lost their bags in a boating accident or something and need to start all over again. Bitcoin whales alone bought $4.7 billion worth of the corn over the last month. That's a crazy, crazy amount of money, man. And there's lots of other new buyers magically appearing. Obviously, we have the old hat here, Michael Saylor. He's been buying Bitcoin in the hundreds of millions of dollars every week, basically. Just stack up to 538,000 Bitcoin or some shit like that. Spot Bitcoin ETFs. Now, I recorded this Thursday morning, Dubai time, so we still have 2 days. But for the first 3 days of the week, we had $2 billion. $2 billion in inflows. That's effing crazy, man. That's huge considering the sentiment that's been around the markets the last few weeks. So hopefully Bitcoin can hold up here and start establishing some good market structure. Plus, we had the announcement that the SoftBank and Cantor Fitzgerald and Bitfinex and Tether are launching a new massive Bitcoin fund as well. It's crazy stuff, guys. Maybe all this, as crazy as it may sound, and what I've been saying here for the last few months is just nothing but a big growth scare. Markets aren't sure what to make about it, but essentially it's a big bull market correction, not the start of a new euphoria or bear market. But the whole game does hinge on one critical thing, that the trade war madness ends sooner rather than later. The longer it goes on, the more uncertainty is, the more economic damage it does, the more likely it is that we get driven into recession or something even worse. Speaking of the madness ending, we might be closer than you think, by the way. After weeks of cranking up the heat, including threatening to fire Fed Chair Jerome Powell, the one seeming adult in the room, Treasury Secretary Scott Bessent, finally stepped into the ring, said, guys, I haven't been a fan of this whole tariff mess anyway. Bessent has gone along with Trump's plans up until now. Now he's calling for tariff de-escalation with China, and in the very near future, because Scott's a smart guy, and surprise, surprise, he understands trade wars are unsustainable and essentially bad for business for everybody, especially in this modern globalized world that we have. Nobody can really afford to do this shit for very long. He says that should give the world, by the way, the de-escalation, he says the de-escalation should give the world, the markets, a sigh of relief. And Trump, well, he's already softening the blow a little bit as well, walking back the threat of gargantuan mega tariffs and taking back his threat to fire Jerome Powell, which has to an extent calmed markets a little bit. Wild whiplash. And of course, we're only one mood change or one conversation in Donald Trump's ear about something else, and we're back to dumping again. So it's a very crazy market right now. And you might think, well, classic Trump, make him confused. Art of the deal, baby. Hear me out. What if none of this is about China in the first place? We know Trump wants a weaker dollar, Bessent wants tax cuts. And when the timing's right, they're going to wrap this up like it was all part of the plan. Because what if it was all part of the plan? Peak volatility was no accident. They crashed the markets, let all their buddies buy it on the cheap, then run it all back up. Bessent, remember, he helped Stan Druckenmiller and George Soros literally crush the British pound back in the 90s. This dude knows what the fuck he's doing. This is all a hedge fund manager's dream. But the market, still, though, regardless of all that, desperate for clarity right now. Give it a bit of certainty, throw in a fat dose of liquidity, boom. The next leg higher could come a lot sooner than people think. New highs could come a lot sooner than people think. And through it all, Bitcoin, man, it's just Bitcoin, and isn't it? It's out here just reminding us why it exists in the first place. An escape hatch from the circus. A lifeboat for when the system goes off the rails. Now, all the crypto market needs is a damn altcoin season, man. Come on, let's buy some altcoins, guys. Altcoins to the moon. All right, that's it. I'll see you back next time. Thanks for watching.